So thank you very much for joining us today. I'd just like to introduce you all to our fantastic speakers at Brewin Dolphin. Matt still will introduce everybody, so I'll hand over to him shortly. So without further ado, over to
Matt. So will you be bringing the presentation deck up, Emma, which I can go through? Okay. So if you're able to bring that up now, because it'll help to give sort of an overview about actually what we're talking about. So as you hopefully know, this is a talk around coming out of lockdown and what the data can tell lawyers. So thank you very much for joining us. Thank you very much for Emma for hosting this. What a great platform, and congratulations, Emma, for really a fantastic resource for lawyers in the area. And hope you get more people dialing in the future, because I just think it's brilliant. So as Emma said, my name is Matt Still. I head up the Southwest and Wales relationship management with professionals in Brewin Dolphin. I'm conscious that not everyone will know who Brewin Dolphin are, so I'll explain that very quickly. Emma, if you're able to go on to the next slide. So I'm at the top left. Happily, I'm only going to be speaking for about 5 minutes. And then I'm going to hand over to Geraint Hampson-Jones and Richard Kelly, and to Greg. Geraint and Richard are investment managers at Brewin Dolphin, and both of those have got sort of set parts of this presentation. In total, it'll be about 20 minutes, and then we're going to be following with more of a discussion. And hopefully the discussion itself will be stimulating, focusing on particularly on the legal profession. Greg Tate is a financial planner at Brewin Dolphin. Greg's lurking in the background, doesn't have a formal slot, but I'm sure will be popping up at some stage to talk about relevant stuff when questions arise. So the next slide, Emma, is about Brewin Dolphin itself, and I won't go through that at any length, but some of you know us, some of you won't. We're an investment management company, lots of offices around the country, manage over £40 billion worth of client assets. And if you go to the next slide, Emma, it's more along the lines of why we're talking to you and why you're listening to us. So Brewin Dolphin has a particular focus on the legal profession. We've had this for some years, and all you're seeing here is a snippet from one of our brochures, but it's quite a useful one because it highlights some key areas where we work with the legal professions. As you can see there, it mentions family lawyers, corporate lawyers, partners themselves, and other members of law firms. Compensation and protection, so this would be PI and Clin Neg, and then private client areas in their various guises. I'm a lawyer by background. I'm not a financial planner or investment manager, but the reason why I'm at Brewin Dolphin is to bring a sort of legal insight and to build relationships with certainly yourselves and other colleagues around the legal profession. And one of my jobs is to keep a close eye on the legal profession itself and why that's relevant to Brewin Dolphin. So, which is the next slide, Emma, if I can go on to that. So this is the context of really what we're going to be talking about today. It's background. We're not a legal profession ourselves, so we're not going to pretend to talk about legal areas, but we are going to talk about the impacts on financial and investment management and the economy on the legal profession. And the reason why we're doing that is that this will be very familiar with you, is that we obviously have been in a lockdown period for over a month, and there have been stuff happening, and all I'm showing you here is things that we're all familiar with, I'm sure. So we've had ups and downs in legal services. Some law firms would report back to me to say, well, there are some areas done quite well to lockdown. So employment law has been perhaps an up arrow. Private client areas, rule drafting, has seen some upturn, but there are other areas that potentially have seen a downturn, and commercial activity, property activity, and in some areas of divorce as well. That's changing, of course, because we're coming out of lockdown, but I don't think it makes a huge immediate difference, but that's part of today's talk. Other issues that affected law firms, obviously access to clients. One question I may raise today is is the issue for law firms client access, or is it, as in literally being able to access you as lawyers, or is it more of the economic malaise behind us at the moment? There's been plenty of furloughing within law firms, and impacts on salaries and bonuses and dividends, homeworking and provision of IT, and having to adapt quickly to bring in IT if firms weren't ready for that, and just surviving. And that's really relevant in the context of the legal profession at the moment, because those two slides from the Lawyer and the Gazette are a few weeks old now, but they were highlighting the fact that firms were furloughing staff. But if you look more recently, the Lawyer, the Law Society via the Gazette published a very brief survey it did a couple of weeks ago, which was suggested that there are a number of particularly smaller firms who are going to be struggling and may be struggling for survival over the next 6 months. And there are firms of all sorts of sizes that potentially have cash flow issues and are desperate for life to get back to normal. Last couple of weeks, there's been the new normal we've been talking about, but I think actually what we're hoping to do is go back to the old normal. Emma, if I go to the next slide, if I may. So I'm going to stop talking in a second, but what we're going to be focusing on today is particularly COVID-19. So the talk is looking at the medical data to some extent of impact of COVID-19 around the world and in the UK, and where we're seeing various trends, because by looking at those trends, hopefully we'll be looking at how we're going to get out of all this. Brewin Dolphin itself relies a great deal on not just market data, but things like COVID-19, because our job is to service our clients in terms of their own investment opportunities, and therefore we need to know what may impact on those investment opportunities. And it's not just whether the markets are going up and down, it's about other external factors like COVID-19. So we're talking about what's happened, a brief overview of that, talk about where we are right now, and which is particularly interesting because obviously right now is a state of flux because we're hopefully coming out of lockdown, and then more of a discussion around outcomes and opportunities for law firms in particular. But that will be more of a discussion, hopefully. And if you have any queries during the talk, please just shout out if you want. You could type into the chat bit or wait until the end. But please do participate as much as you like, because it's just frankly more interesting probably for you. If I go on to the next slide, Emma, because happily I'm going to hand over to Geraint. We're going to kick that off with a question to Geraint, which is, in 2008, obviously we had a big recession, which we'll be familiar with, and in 2020 we've had another impending recession. And Geraint, is 2020 different to 2008?
Yes, it definitely is. But I think before we go on to that, we're going to do a quick straw poll with our audience. So a couple of quick questions to see what how they're feeling about things at the moment. So if we can do that first, Emma, that'd be great. And then I'll endeavour to answer Matt's question thereafter.
Okay, so can you all see the poll on your screen?
Yep.
Yeah, okay, so if you could you're doing it, fantastic. Just pick it's all anonymized, as I say, and I think, I'll just give people a couple of minutes. Just short of a few, there may be people that are phoning in as well. Okay, anybody else? Yep, I think we're there. Would you like me to?
Yes, please, if you could.
And I'll share the results. So can you all see that?
Yep.
Lovely.
Excellent. And then have we got the second question as well, Emma?
Of course.
So interestingly, the answers from the first question aren't unfamiliar to us at the moment. They're very broadly similar to how our clients are feeling, which is perhaps not unexpected.
So the second poll has been launched. Okay. Wow. Okay, I think everybody has voted. Okay, I'm going to end and share.
Great. Well, that's hugely positive, and probably a bit different to how some of us or some people have been feeling at the moment. Yeah, going back to Matt's question, yeah, it's important to remember really that this is a first for everybody. We've never been in this situation before. We went into 2020 having had a really strong end to 2019. We'd seen Boris be elected here in the UK, and markets have really picked up on that, and in a sense looking forward to 2020 with some optimism. We were of course going to talk about Brexit for at least another year, and then looking at the election in the US at the latter end, sort of Q3 of 2020, with Trump a favourite to be re-elected. And of course, for all the Welsh and Englishmen on the call, we're going to be talking about 2020, Euro 2020 around now. As I said, yeah, we've seen market crashes before now. Some of you will have worked through the financial crisis, but also the dot-com, and some of the elders on the call will have seen the Asian bubble in the late 80s. What is very different is the speed of this, the pandemic, which has caused worldwide lockdowns, economic closures, and added to that, as if that wasn't enough, we've also seen an oil crisis at the same time. So what impact has that had? Well, yeah, 7.5 million people are currently furloughed, and if you add that to the number that are employed in the public sector, 49% of all employees in the UK are currently being paid for by the state. It's an incredible statistic, and had we, yeah, if somebody suggested that even a few months ago, you would have been called crazy. The number is likely to be higher again in Wales, with 74% of businesses using the furlough scheme. The Chancellor has said it's very likely that the UK is in a significant recession at the moment, and that it's been the largest contraction in GDP since the end of 2008. And in just 1 month, the economy fell by as much as it did in a year and a half of the global financial crisis. I mean, that's pretty depressing news, and I'm sure some of those stats aren't unfamiliar to you. What we're looking to do here is go through where we are now, because if we look at where we are now, it can give us the information to look towards the future and how that might impact things going forward. If we can go to the next slide, Emma. So I'm sure you've all seen a familiar chart to this that the FT has produced, and we get this on a daily basis by Pantheon, region by region, but also country by country. This data is a week old because we have to submit all our presentations to our compliance department, but it gives you the overall overriding trend of things at the moment. And what it shows is a 7-day rolling average. So the left-hand axis is the total number of cases, the right-hand total number of deaths, and of course across the bottom is time, with the blue line again the number of cases, and black line the number of deaths. And what we can see is that Europe is coming out of the first wave of COVID-19. There is a distinct downward trend, and you can see the difference, or the lag, or that 2-week period between infection and death, and the clear sign that we are potentially coming to the end. The UK figures, which are the bottom right hand side, are lagging the rest of Europe. 2 reasons for that really. The first is that the blue line has flatlined to a certain extent because of the increase in number of testing that has taken place, and then in addition, we are slightly behind Europe. So you'll all remember the pictures of Italy and the crisis that they were going through, and that being a week to 10 days before the real impact was felt by us here. There are similar charts to this that we have globally, particularly for the US, though the US, given its population, is still struggling a little bit. They are still on around 21,000 cases, new cases every day, and it's a lot worse for other countries such as Russia and Brazil. However, and if we're focusing on the positive, we have seen countries such as Denmark and Norway, who were easing their lockdown 3 weeks ago, continue their downward trend. And of course, the gold standard, which is seemingly New Zealand, who've had the second day of no new cases at all. And Japan finally lifting its state of emergency in most provinces today as well. Emma, if we can go to the next slide. And ultimately, we're now seeing the beginning of suppression measures being eased, and Richard's now going to touch on what the second wave, or how the second wave might impact on things, and how quickly we expect to return to a new normal.
Thanks, Garrett. Firstly, thanks for all attending today, and it's really pleasing that your answers to the survey reflect our views as well. We certainly believe that the economy will be in a better place in a year's time. Garrett's posed these questions here as to what the future looks like. Clearly, we're seeing that the government is keen to get the economy moving as quickly as it can, but we're probably in a quite long, drawn-out early stage of easing the lockdown. More businesses are opening. We know construction is back to work, and yesterday in England, estate agents are allowed to start to market and promote properties again, which is clear evidence that people want to get back to work and to move forward. If we can move to the next slide, please, Anna. So, is there any reason to take guidance from China? China, as we know, where the pandemic started, first into lockdown, and obviously now the first out of lockdown. They opened the retail world a couple of weeks ago, and this may not be the best guide, but Hermes reopened 2 weeks ago last Saturday, and in just one flagship store, they took $2.7 million of trade in one day. Again, I say it may not be the best example, but it suggests that the pent-up frustration of not being able to do what we do in a normal day, in a normal week, people do wish to go out and do these things, and perhaps spending will return much, much quicker. The data from Chinese government suggests that manufacturing is improving, is picking up, and congestion, which suggests people are moving around, is also picking up. Just be mindful that this is official Chinese government data and it may not be wholly accurate, but the suggestion is that the lockdown has worked and China is getting back to business, and we hope that this will be reflected across the rest of the global economy. If you can move on, please, Emma. So, sorry, it's actually the next slide. Second wave, will there be a second wave? Opening the economy clearly gives risk to an increase in both cases and, unfortunately, fatalities. We expect this to happen, but we think it will be contained. As Garrett's shown you the Pantheon data, and we've had about an hour ago their update for today, and in every economy that has reopened, cases are still slowing and reducing, which is very positive for the future. We believe the NHS is prepared for what may come. A little bit of evidence that I've had is my wife is actually an intensive care nurse, and they are already returning some of the COVID capacity back to mainstream ICU treatment. So they are prepared for what is potentially ahead. We also think that any waves that do come, second waves, could be regional. Big cities are definitely more at risk than the countryside, as Geraint referred to earlier. And from a Brewin Dolphin perspective, we know that our big city offices like Cardiff will be the last to go back to work. We are mindful that care of our workforce is important, and businesses will be prepared and will plan to make sure any return to work is handled sensitively. Taking all of that, we believe that all these spikes will be contained, and that is positive for the economy. So looking on, what will the recovery look like? Geraint's talked about the number of people effectively being paid and funded by the government at the moment. The amount of money being thrown at the pandemic and at the recovery dwarfs anything that we saw in 2008 post the financial recession. We have unlimited liquidity. All global governments and central banks are committed to making this a short recession. As Geraint referred, it is very different, and nowhere in the past has a recession actually been caused by government action. The governments around the world have driven us into this recession by furloughing, by lockdown, and now they are all committed to making it as short a recovery as possible, which is positive for us looking forward. If we go to the next slide, please. So what will the recovery look like? This slide from JP Morgan is based on American data, but we think it's quite reflective of the UK. The downside projection is reminiscent of 2008. We had the very sharp fall in global activity in GDP, and then it took a long, long time to recover due to the unique circumstances we had then. About a month ago, the general consensus that the upside recovery was most likely. We sometimes term this as a V-shaped recovery with a very sharp fall followed by a very quick recovery. However, with the length of the lockdowns that we're seeing, we suspect this now is not likely to happen, and the central projection is most realistic. This was referred to by the CBI as the Nike swoosh of the sharp fall, and then a recovery which then slowly spreads upwards. If we take the data that the Americans have here and JP Morgan have, it's indicative that the markets and the economies will recover towards the end of this year, which I guess reflects also your views that in a year's time we will be in a much better position.
Rich, I've got a question on that, if I may.
Sure.
So I was reading the paper this morning, happened to be the Daily Mail, but other papers are available. I'm sure they're all saying the same thing. But the Daily Mail said that the property market in England, at least, was bursting back into life. And you've touched on this in terms of the curves you're looking at there. But in terms of recovery, and nearly everybody in the audience today is saying that they expect things to be very good, hopefully in a year's time. But do we think the property market is indicative of all markets? So is the economy going to burst back as quickly as potentially property is?
As you pointed out, Matt, at the beginning, we're certainly not property experts, but it's, I think, indicative that the government wants the economy to come back to life. There must be an awful lot of people out there who had plans to move in February. There's no reason why that should have changed. They will still need to do it. What they need is the ability to actually get out and get back to new normal, whatever new normal looks like. We think there are 4 probably indicators as to why property market might be reflective of the whole economy. We've talked about furlough schemes. There will have been some job losses, there's no doubt about that. But we think how many jobs have been saved by the schemes the government have put in place. This has given people much more confidence that they can look to the future. They can go ahead with their plan. I know Greg would talk a lot about having a plan and reviewing a plan. But broadly speaking, there's no reason why people's plans should have changed through this. It's been a blip, it's been a sharp blip, but we believe that it is there is positivity ahead. So apart from the furlough schemes, how many people have saved money by working from home? Businesses, ours included, have identified massive cost savings over the last 3 months. Individuals will as well. We believe people have a desire to get back to new normal. I think if you look at the VE celebrations last Saturday, people were out in the streets. They were wanting to, if not have a party, at least do the normal things that they want to do. I know I need a haircut. We haven't had a haircut for 3 months. People need to get out and do the things that they normally want to do, be that a haircut, be that going to a restaurant now and again, rather than having a takeaway. Some social activities are being relaxed. I know my golf club's opening next week. These things are all small, but when you put them together, they have quite a considerable impact on the economy. From a corporate perspective, we haven't talked about it, but somewhere around 50% of the FTSE all-share companies have either cut, cancelled, or suspended dividends. This is billions of pounds worth of money being put back into company balance sheets to position them for recovery. It will allow them to take the actions that they need to do to grow their business in as quick a time as possible. And that's perhaps reflective of the JP Morgan curve of by the end of this year, we will see growth back in the economies. The other thing I think which is unique, and Geraint's touched on this is a no-blame recession. In 2008, the banks were seen to be the drivers of the recession. There was a blame culture. This is very, very different. Everybody from central bank to government to individuals are all working in the same direction with the same aim of making this a short recession and a quick recovery. So we actually see all those things as being quite positive. And to go back to your question of the housing market and the estate agents, it's a desire to get back to normal and to make the economy work again. And we think, yeah, it will show that it is the first stage of a general return to work. If that answers your question.
It did, once I took myself off mute.
So we just kind of summarize and then move to the Q&A, which is obviously much more interesting. Situation is volatile and constantly changing. Yesterday showed that with the estate agents, as you pointed out in England. The reinfection data is very, very positive. Those economies that have reopened are not seeing spikes in cases. And hopefully that will continue to be reflected. The one perhaps caveat is we're probably all going to be restricted to domestic activities for some time yet. We know the leisure world is difficult and airlines in particular are struggling, but that will move forward. We have seen from China that there are some positive signs for GDP, and we hope this will be reflected across the rest of the world and the UK. Hopefully governments will start to work together. We'll get a consistent message. Certainly in the UK, we know there have been some issues there. And stock markets, which we didn't really touch on, but they have recovered. I think the important thing to remember is that stock markets in particular look 12, 18 months forward. So they're not looking at the picture today. They are looking at where we might be in 12 to 18 months. And as the people on this call have said, they all feel more positive, or generally feel more positive about where we'll be in a year's time. Still, there is light at the end of the tunnel. And we think there are opportunities for all of us, not just now, but looking forward to start to take a more positive stance.
So thanks, Rich. Thanks, Geraint. Mentioned at the beginning that the purpose was to give you a sort of overview of where we're seeing COVID-19 going and where we're seeing potentially the economy going. A lot of this won't be unfamiliar to you. I'm sure you're reading the press and listening to the news, but it's giving that these guys are experts in managing the market, so there is a good insight. But also, we manage the funds on behalf of a number of clients who are instructed or instruct lawyers. So this is hopefully, the next, say, 15 or 20 minutes, an open discussion for yourselves to share whatever's on your mind, ask whatever questions you might have. I've got a few questions I could ask these guys. So over to the floor.
I've got one, Matt.
Hello, Clive.
How are you doing? Okay.
Yeah, good. I haven't seen you for a while.
Good.
Good to see you.
No, yeah. Obviously, we're responsible for placing client money in banks and financial institutions, and also responsible for clients' money that's invested in stocks and shares. I wondered if there are any due diligence points we need to consider currently with the economy in its current position.
Okay. Could I hand that over to either the guys on the panel? Do you want to take that?
I'll try and take that then, Matt. Thank you, Clive. Yeah, it's an interesting time for all investments. Certainly, if you're acting as trustee or effective trustee for your clients, you need to be mindful of plans that were put in place maybe a year ago, or indeed as late as January. And are those plans still working as forecast? I've mentioned about dividend cuts. If you look at trusts you may have in place, for example, do your remainder men still receive the income that they were expected to receive 3 months ago? Is that impacting upon decisions that you need to take? It's very important that you keep reviewing what's been put in place in the past to make sure it's valid going forward. On a broader term, it depends on what our objectives are, but everyone's understanding of risk and appetite for risk is different. And what events like this do is change people's perspective and understanding of what risk is. What it means for us and what it means for you and what it means for your clients will be very, very different. And one of the things that we have found over the last couple of months is we have had lots of calls from solicitors and other professionals, as well as our clients, asking us about this. Has risk changed? Has the outlook changed? And on a positive slant for us in particular, are there opportunities for us to do more things? We have seen a lot of new business opportunities coming forward.
I think it's also
Yeah, sorry,
Connor. I think it's also one part of that question seemed to allude to the banks as well. It's important to remember that since the financial crisis, there has been a lot of work undertaken by the banks to strengthen their balance sheets. And part of the reason why they aren't paying dividends now is to continue to shore those up, to give confidence to retail clients, essentially, that we aren't going to be in the position similar to Northern Rock and HBOS that we found ourselves in 2008, and that there is confidence in the financial system as well.
So to give Clive a little bit of insight into the markets, is there anything we could share in terms of where was the market 2 months ago and where is the market today in the UK?
I did some work prior to this, and I haven't got the exact figures in front of me, but basically I think on about the 27th of February to the 27th of March, the FTSE 100 fell 32%. Fastest decline in my experience. The S&P in America fell 25% in a week. Real bear market territory. But we've now seen big recoveries since then. Much more stability. I think it's reflective of the medical data. It's reflective of the work that governments are doing, central banks are doing, to try and reassure everybody that they've got a handle on what's happening. Is there an opportunity? You ask about falls. Yes, everything looks cheaper than it did. Much cheaper, much more value than it did just 2 months ago. But have the risks increased? Undoubtedly. Stock market valuations are based upon future earnings. We don't know what some of those future earnings are going to be. Companies are warning, guidance is being withdrawn. But we just, as Garrett said, companies have shored up balance sheets. Banks have cash. The government's encouraging the banks to lend that money. We do think there are opportunities, and valuations do look attractive.
Yeah.
If you bear in mind that rates on cash is zero as a comparison, even though inflation's falling, if you have clients who do need to actually grow their assets, and then yeah, investment opportunities are there.
Clive, if I can put that back to you, maybe as a lawyer managing, servicing clients who monies are in trusts or other areas where they're dependent on portfolio growth. So we support corporate protection clients, clients who've had a damages award that needs to support their lifestyle over years to go. So concerned about our income projections the same as what they were 2 months ago. So your own experience, Clive, if you're able to share that.
I was still thinking about whether I can make a fortune on that Nike swoosh. Going through my mind. From my
yes, Clive, you can.
Yeah. Do you mean an experience generally of how we're finding it within firms, or are you thinking more on the investment?
Yeah. You're looking after, you're supporting clients. To some extent, you'll be responsible for trusts, and you'll have clients out there who will be concerned about their own incomes.
So, I see. Well, I'm delighted to say that our head of private client is on this call, Linda, and I can quite nicely pass this over to Linda.
Yeah, I mean, I've had a few. Hi, everyone. I've had a few. Am I unmuted? Okay.
You're okay.
Brilliant, right? Yeah, I mean, we deal with quite a few trusts, because as you touched upon about the objectives, really it's sort of about the long game for the clients anyway. So I had a few clients sort of call up in a bit of a panic, but then the markets we think probably will recover, and if they don't need funds out of the trust monies just yet, there's no impact as such. But I think you're right what you touched upon with the remainder men and people that need the income, making sure. So I think I'm going to go back through some of my trusts now and make sure that they're how much have they been impacted, and do we need to sort of tweak things for them.
And do we have any family lawyers in the room? Because one area, obviously, you're in a situation where you've got two couples who are going through a separation, maybe looked at asset valuations again 2 months ago, maybe longer. Stuff has changed in the meantime, property values, share prices, etc. Any family lawyers that might be looking at their financial settlements? Don't have to be any family lawyers in the room. Maybe they're just too busy dealing with their clients.
I mean, I might ask, has it had an impact? Have you, in terms of your clients and people that you're working with, is it that people are holding back off that analysis if they've got if they've got settlements to put through at the moment, or is it making have you heard that it might be making individual clients uneasy?
I can answer that, but I'm happy to hand it over to anybody on the panel.
Greg, are you?
Okay, yeah. So Brewin works with George Matheson of Matheson Consulting, a pension expert, so a pension on divorce expert, and it really depends on how the estate is being shared through the divorce. So there's a couple of options, primarily sharing or offsetting. Offsetting is going to be more problematic at this point in time because valuations of various assets will be fluctuating. Whereas if you're sharing, so for example, say there's a personal pension, money's invested in the markets, that's been shared 50-50, there's less impact if that's dropped by 20% in value. Whereas if it's been offset against something else, there can be more impact. So at this point, there's not been too many issues. There are things that need to be looked out for. Change in values, defined benefit pension schemes. So, the big older companies that have a defined benefit pension, which is your pension based on your income, transfer values will be changing because there is a reduction in the gilt yield. So there's certain aspects to look out for. In terms of, is it stopping work? Not yet, but if you have any questions, I would say speak to, or typically people get a report, I should say, from their pension expert. If you're worried about previous valuations in the report, speak to your pensions expert, such as George Matheson, and he will confirm to you whether he thinks anything needs to be reconsidered. And that's the direction that he's given so far.
Yeah, just to add to Emma's question. Yeah, sure, Emma. We've been approached by not clients themselves who may be going through a divorce, but seeing the solicitors acting for them, who will look at asset valuations 2-3 months ago, and we'll be looking at them now and one of our roles is to look at help solicitors value certainly stock market assets so they can maybe look at the balance of shared assets. I mentioned at the beginning about it sounds a bit odd to say there are winners and losers in this area, and it sounds even odder that some of those, I'm not quite sure how to phrase this, but there are clearly some areas, and I talked about private client and maybe probate departments being, as I say, a winner is not quite the right way of saying this, but there have been deaths in this period, and I know there has been a backlog in probate or grants of probate anyway. If you're a private client lawyer and you've got you need to pay the tax, obviously within 6 months of death, and if there are any assets which are tied up in portfolios, has that been an issue for solicitors? If you're trying to actually liquidate any of the assets tied up in shares, has that been an issue for any of you?
Anybody brave enough to speak? If you're having trouble unmuting yourself, let me know. No, I don't think anyone's popped their hands up. Sorry.
Well, I'm going to put that. That's okay. I'm going to put that question to our panel then. So, if there are, because obviously people hopefully listen to the recording afterwards, and they may have this question. So, if solicitors are or administrators are having to look at assets which are tied up in stocks and shares in order to pay tax in the future, is there anything that we would help say to those advisors or those administrators at the moment? I'm going to throw that out to our panel.
Yeah, I think that's one for me to answer, isn't it? So people will be aware, so I'm not going to teach people to suck eggs, that there are options to recalculate inheritance tax. So if certain assets are sold within a year of death and the value's dropped, then inheritance tax can be recalculated. Where we would tend to help is to talk through a portfolio. You might not want to realise all of it. You could realise part of the portfolio, but we could talk through a portfolio and help you to understand what might be in your client's interest in terms of realising to reduce inheritance tax.
Great.
Okay. Talked about, Rich, and particularly you mentioned about opportunities. You talked about Brewin Dolphin and opportunities for our own clients, and potentially that being relevant or reflective of other opportunities for other businesses. What did you mean by opportunities?
As you mentioned, from our point of view, we've had an awful lot of clients who probably understand peaks and troughs, swings. They tend to be slightly older. They will certainly have gone through 2008 and maybe the other recessions that Geraint talked about. And Linda mentioned this as well. It's long-term investing. There's no doubt that history has shown us that staying invested through these troughs proves to be the right thing to do in the longer term. If we take 2007, 2008 on onwards, had you invested at the peak of the market at the start of 2007, suffered all the declines of 2008, which if you take America, the S&P fell by over 50%. It's about 40% in the UK. It was 28 months to recovery. In the term of investment time horizon of 10, 20, 30 years, to recover your money in 2 years is pretty short. And although we'd like to think we're pretty good, we're never going to time the top and the bottom. We're never going to get that right. And I think the reassurance is that history has shown us that throughout all times, staying reinvested is very, very important. But clients have seen it as an opportunity, recognising, as the people on this call do, that the future looks better ahead. And they're actually seeing what's happened in the last 2 months as an opportunity to add more assets to risk, if you like, because they see that as being the better opportunity than leaving it in cash. Just to go back to your point about form E's and valuations, there are probably other people on this call better qualified than me, but I've got no idea what house prices are going to look like next week, next month. You know, are those people going to want a deal? Is somebody out there wanting a, you know, I think you referred this morning to 20% off house prices in one of the newspapers. At least with stocks and shares, you can value things, which makes it a little bit easier.
Okay.
Sorry about just jump in there. I think we've got to remember as well that going back to my very first point, this is a new experience for everybody. We're all working in a digital environment at the moment, uncertain when we're going to return to our bricks and mortar, and that's going to be the same for everybody. But also there are some things that will have been accelerated. So the death of the high street being one. We've seen a number of fashion labels close this stores, but there are also opportunities for those who are able to diversify or change their business models quickly, and those are the ones that will really take advantage of that. We all are going to be in a very new normal after this. Working practices are going to change, and whilst maybe not a direct correlation, but of course Kirsty Allsop was talking about yesterday, that we may see city centres change dramatically as a result of this, because people will be less concerned about their commute, more concerned about their well-being and how they combine their work-life balance, and see the house prices and properties or demand for properties in the country increase. So there are going to be substantial changes from that, and we can't probably get away from that. It's just understanding how that's going to impact on all our clients, really.
Yes, so again, I'll throw this out to the audience if anybody's brave enough to answer it. Obviously, you've got clients you're trying to service, and we are in a new normal where you've been locked down in your own houses or wherever you are for some time, and as have your clients. How have you engaged with them?
I think, Matt, it's a massive opportunity to break the mold, isn't it? We're all sort of been governed by how we did it in the past and the precedent of how we did things. We had a partners meeting this morning, we were saying just that. It's a real opportunity for a blank sheet of paper, isn't it? And to start again,
I would say,
in which we want staff to work and interact with clients and to start a new relationship. So it's a real opportunity. So to rush back to do it as we used to do it would almost be to let that opportunity slip through your fingers, wouldn't it? So I think we really all need to think strategically and what do we want, and then let's have that new arrangement with our clients going forwards. But it's an opportunity that probably only comes once in your career, I think. Hopefully. Again, but it has come. There is a side of it. I think there's an opportunity for businesses to change.
Can I throw a firework into the discussions that's been going along so far?
Please do, Peter.
Most of my work involves professional negligence, and regrettably it involves suing other lawyers and other professional advisors, to include financial advisors. I just wonder, hindsight is a wonderful thing, but I just wonder to what extent, had we all had our thinking caps on before the lockdown, there were movements afoot in terms of what was happening in China and in Southeast Asia and so forth. Should we have foreseen, which is the test that the court would apply, of that changes were afoot and that the stock market may take a dive? Now, I should also throw into this equation that on a personal level, I happen to be a client of Brewin Dolphin, albeit through your colleagues in Bath. And I don't mind admitting that I've had a couple of your, what I call 10% letters, telling me that my pension fund and my ISA fund, which is in stocks and shares, has gone way below what I hoped it would have. Yes, it's been coming back, but I just wonder whether there will be cases out there where lawyers will be pursuing financial advisors. Indeed, Linda mentioned a case, in terms of lawyers sitting on clients' money and not being active enough, soon enough, to foresee what was happening. Any thoughts, anyone?
Shall I take that one as the planner?
You can start with that, Greg.
I should perhaps add that I don't propose to sue Brewin Dolphin myself.
That changes my answer. I think ultimately where we invest money for clients, it's part of a long-term plan. And that long-term plan has an assessment of what is affordable, what's not affordable, and what somebody's capacity for loss is. So where something like this happens in the market, whether it takes a month to happen as it did this year, or whether it takes a couple of years to happen as it did previously, we should be making that assessment for those clients. And part of that plan will include, where money is required or not required, having a cash emergency pot set aside so that you're not necessarily dipping into investments at this point and realizing a loss. Something that Richard said earlier, and Linda referred to, which is long-term investing. Over the course of history, there have always been periods of time where the markets have dropped. But so far, they've always come back. So in terms of if you've foreseen it, typically you wouldn't come out of the market because time in the market as opposed to timing the market is the most appropriate course of action for clients.
If I can jump in on that, Greg. Most of our clients, Peter, do think that we have crystal ball abilities and can spot these things before they happen. It's probably fair to say there were some signs that economies generally were a bit overinflated. Mr. Trump and his trade wars has started that question last year. Certainly at Brewin's, over the last few years, we've changed a lot, and it all comes down to understanding what risk is. And I'm sure there will be cases around of advisors being sued or trying to be sued or complaints to the regulator that clients didn't understand the risk they were taking. And I think indeed you're seeing that now, aren't you? On radio and TV, like, have you been sold an ISA that you were told was an upward only investment? So I think there will be cases, but it would be they'll be successful, I think, only if you or your clients can prove that you were taking more risk than you believed was suitable, which is, I think, is where Greg's talking.
Thank you.
Emma, I'm conscious that you gave us very kindly an hour slot, and the audience have put time aside. We're coming up to almost the hour, and now may be a time to draw it to a close. But before we do that, an opportunity to ask any other questions or raise any other points.
I'd just like to ask Geraint, when are we going to be able to go back and play golf in Wales, Geraint?
Well, unfortunately, due to a young family, I am no longer the golfer on the team. So Greg and Richard are you're more likely to see them on the fairway. You'll probably see me more likely in Lycra, I'm afraid. So I'm eager to get out on the roads.
I don't know where you play, Peter, but my course opens on Monday.
Well, mine is supposedly opening on Monday, but I'm a member at Glamorganshire, which, as you know, is in Penarth. But having said all that, I just wonder whether Mark Dredfield will turn around and say that living in Cowbridge, it's too far a journey for me to go to Penarth to play.
As long as you can walk there, Peter, it's fine.
Yeah,
there was a comment in either yesterday or the day before, was Telegraph. I'm not sure whether it was Corrigan that made it, on the basis that somebody expressed a view that it was too far to travel from Cardiff to play in Porthcawl.
I think I read somewhere that if you live in Cardiff, you're supposed to only play in Cardiff. You're Glamorganshire, I'm Southern Down, so it's 8 miles from my house. So I reckon I can just about justify that as being local enough. Not that I would walk there.
Any other questions before we allow you to go back to what you're doing? Maybe have you?
I had a very quick one, hopefully quickish, regarding whether euro is against pounds. Only because I've got a good-sized compensation claim of settling in Southern Ireland, and we're going to be paid euros damages, of course. So I'm thinking about how we're going to play that against then sterling and transferring it for a client who lives in this country. So just throwing out there in terms of where we think the euro and the pound are going to be over the next few months.
I'll grab that if you like, Geraint. Currency is difficult, as you rightly suggest. The one thing Geraint mentioned very briefly at the beginning that we haven't really touched on is Brexit. It's off the agenda at the moment. I can't see any way that we're leaving with any kind of deal done at the end of this year. There's got to be a reasonable chance that these concerns will weaken sterling against the euro. I might be wrong, but that would be my gut feeling.
Yeah, I think
is that good news for Clive then?
Yes.
Yeah. I think to add on to that, we, even when taking on new client money, we do it in phases, we do it in tranches to avoid any peaks in markets as they were. And that's probably an approach that would be sensible with a sum that you're looking to convert as well, that you don't necessarily pick a date or a point in time, that you do it over time so that you're spreading that risk.
Thanks, that's very helpful.
Okay. Thanks, chaps. Richard Jones, I was particularly impressed with the fact that you looked, I'm assuming you're not in the Caribbean, but it looked like you were walking across that bridge when you came back to your desk, which I thought was marvellous.
I actually took that in the Maldives last year, and I should be going again tomorrow, but fortunately it's cancelled. It was a very cheap week I managed to get. It's thunderstorm season, so luckily I'm not going.
Good news then. Thank you everybody for joining the call. If I can give a very quick plug to our next seminar, date to be decided, but probably in 2 weeks' time. We have done some in-depth research with the Lawyer magazine. It is looking at the financial well-being of lawyers, so lawyers' attitudes, their own investments, savings and pensions. The research we've done, or the lawyer did for us on our behalf, suggests that there's some concerns, quite a lot of concerns, I would suggest, within individual lawyers about actually whether they put enough aside for their pensions, and etc. And so the forthcoming talk that we'll be doing will be exploring the insights from our survey and how we can help advise solicitors and what lawyers can think about it in terms of their own savings, etc. So look out for that one if you may. Emma, thank you very much for hosting us. Thank you everybody for joining the call. Thank you very much for our panelists for your contributions. Emma, is there anything else I'm missing before we log off? You may be on mute.
When is that next seminar of yours?
At the moment, Peter, it's penciled in for 2 weeks' time. So Thursday, 28th, I think might be in May.
If you could circulate information, I'd be grateful.
Certainly. Emma, I think you're still on mute. If you're talking, Emma, I can't hear you. Maybe others can.
I've got 2 mute buttons and I think I've pressed them both. Can you hear me now?
Can now.
Yeah, fantastic. Yes. Sorry, it would be me that lets myself down. So I will circulate the events to everybody because they'll be hosted with us again, which is very kind of Brewin Dolphin. And there's more events that have just been announced for next week as well, from inquests and inquiries in Wales to cyber security, because we've had a number of law firms in Wales that have been unfortunately hacked, and we want to make sure that everybody's protected, but that also is relevant to professional services. So there's many, many more events. Thank you again. I will share the video and the slides with you and for you to circulate more widely. Take care, and I will see you soon.